In 2018, some of the biggest names in venture capital placed an $82 million bet on Gwyneth Paltrow and her wellness industry company, Goop. Lightspeed Venture Partners led the final Series C round. NEA and Felix Capital backed her earlier funding rounds. Forbes called her a visionary. Fortune put Goop on its list of companies reshaping consumer wellness. The valuation hit $250 million. And then something strange happened. Nothing. No IPO, no acquisition, no new funding round. For 8 years and counting, that $250 million number has just been sitting there, untouched, unverified, and increasingly hard to believe. Because here is what Gwyneth Paltrow told Fortune magazine in March of 2025. After 17 years of running Goop, she said the company is very, very close to its first profitable year. Not profitable, close to profitable, after $82 million in venture capital. 17 years and $82 million, and the word profitable still has the word close in front of it. Today, we are pulling apart the entire financial story behind Goop. We are going to walk through 5 parts. First, where the $82 million actually went. Second, the lawsuit trail that would have killed most startups. Third, how Goop compares to competitors who launched a decade later. Fourth, the parallel empire Paltrow quietly built for herself. And fifth, where this leaves the investors who believed in her pitch. Let us start with the money. Goop began in 2008 as a weekly email newsletter. Paltrow was writing wellness tips from her kitchen. There was no revenue model, no product line, and no business plan. For the first 7 years, it was essentially a celebrity blog operating in the direct-to-consumer wellness space without any actual commerce. Then the venture capital arrived. In 2015, Goop raised a $10 million Series A funding round. 1 year later, NEA and Felix Capital led a $15 million Series B round. And in March of 2018, Lightspeed Venture Partners wrote the biggest check of all, a $50 million Series C that valued the company at $250 million. Total outside capital across all 3 rounds came to $82 million. Now here is the part most people miss. That was the last priced round. 8 years ago. In venture capital, going 8 years without a new round typically means one of 2 things. Either the company is printing cash and does not need the money, or the company cannot raise at a valuation that would not embarrass everyone involved. This is what VCs call a down round scenario, when a company's burn rate has exceeded expectations without achieving the growth metrics needed for an up round. Goop is not printing cash. If you are learning something new, take a second to subscribe. We break down celebrity business deals like this every week. Let us move to part 2, the lawsuits. Because while Goop was burning through $82 million trying to find profitability, it was also collecting legal problems at an impressive rate. In 2017, Goop started selling $60 Body Vibes healing stickers. The marketing claimed they were made with the same carbon material NASA uses in spacesuits. NASA responded publicly. A former chief of NASA's Human Research Division called the claim complete nonsense. Goop quietly removed the NASA reference. 1 year later, prosecutors from 10 California counties sued Goop over its $66 jade eggs and $55 rose quartz eggs. The company had claimed these products could balance hormones, regulate menstrual cycles, and increase bladder control. None of that was true. These health claims violated Federal Trade Commission guidelines for unsubstantiated medical benefits. Goop paid $145,000 in civil penalties and agreed to refund every customer who bought an egg between January and August of 2017. But the lawsuits did not stop there. In January of 2020, Goop launched a $75 candle called This Smells Like My Vagina. It sold out in 90 minutes. Elton John reportedly bought several. Then in 2021, a Texas man filed a $5 million class action, alleging the candle became engulfed in flames after burning for less than 3 hours. A British journalist posted on social media that her candle had exploded, using a hashtag that referenced Paltrow nearly killing her. And there is something even darker. Paltrow personally promoted bee venom therapy in the New York Times in 2016, saying she had received it, and it made an old injury disappear. In 2018, a medical journal published the first documented death from that exact therapy. A 55-year-old woman in Spain died of organ failure after anaphylactic shock during a routine bee venom session. The legal problems did not stop there. In March of 2024, an Oregon company called Good Clean Love, a small female-founded sexual wellness brand that had been around for over 20 years, sued Goop for trademark infringement. Goop had launched a product line called Good, Clean, Goop, and Good Clean Love alleged that Goop was deliberately creating confusion with their established brand. The day after Goop received the cease and desist letter, Good Clean Love alleged that Goop doubled down on the branding. The lawsuit eventually settled on undisclosed terms. Now let us move to part 3, and this is where the Goop story gets truly uncomfortable. The competitor comparison. Because while Goop spent 17 years and $82 million trying to reach profitability, other celebrity founders lapped her. Kourtney Kardashian launched Lemme, her supplement brand, in September of 2022. Within 16 months, Lemme was generating $30 million in annual revenue. That is less time than the gap between Goop's Series B and Series C. Lemme is now in 2,000 Walmart stores and drove $13 million through TikTok Shop in a single month. Kim Kardashian's Skims raised $225 million at a $5 billion valuation. Nike partnered with Skims to launch Nike Skims in September 2025, creating an entirely new category. Goop's $250 million valuation from 2018 is 1/20th of where Skims sits today, and Skims launched 6 years after Goop raised its Series C. Even Jessica Alba's Honest company, which we covered recently, makes Goop look slow. Honest raised roughly $500 million, went public in 2021, and while the stock crashed 80%, the company managed to post its first full year of positive adjusted earnings in 2024 on $378 million in revenue. Goop has roughly 1/6 of the capital and 1/8 of the revenue, and still cannot turn a profit. If you want to see that full Jessica Alba breakdown, the link is in the description. Part 4 is where the distraction framework kicks in, because while investors are still waiting on their returns from Goop, Gwyneth Paltrow has been quietly building something else entirely. Her personal angel investment portfolio includes roughly 25 companies. She was an early backer of Olipop, the prebiotic soda brand. She invested in Daily Harvest, which was acquired by Chobani in May 2025. She holds positions in Aura, Canva, Sweetgreen, and Pinterest. Several of those investments were made at early-stage valuations that have since multiplied dramatically. On the real estate side, she sold her Brentwood mansion for $22 million in January 2025. She owns properties in Montecito, the Hamptons, and Malibu. Celebrity net worth trackers estimate her total personal fortune at approximately $200 million. So let us be very clear about the math. Paltrow holds roughly 30% of Goop, which on paper is worth about $75 million at the 2018 valuation. But that valuation has not been tested by any new funding round in 8 years. Her personal wealth outside of Goop is estimated at over $125 million. The wellness brand that her investors poured $82 million into appears to be the least valuable piece of her financial life. Now for Part 5, the present day. In 2024, Goop fired approximately 18% of its 216-person workforce. Paltrow told Fortune the cuts happened because the payroll was too high. The company has lost roughly half its peak staff since 2019 through layoffs and resignations. Now, Goop does have one bright spot. Goop Kitchen, a chain of 6 ghost kitchens in Los Angeles, raised $15 million in 2024 at a $90 million valuation, led by Travis Kalanick, the co-founder of Uber. It grew 60% last year. But here is the detail that changes the math entirely. Goop Kitchen is a structurally separate entity from Goop Inc. It has its own cap table, its own investors, and its own valuation. That $90 million valuation does not flow back to the people who wrote checks for the original $82 million invested in Goop Inc. The best performing piece of the Goop universe does not actually belong to the Goop investors. Her former second-in-command, Elise Leuchten, who spent 7 years as chief content officer and co-hosted the Goop podcast, resigned in 2020. In 2022, she publicly said that the company's cleanse culture had distorted her relationship with her own body. Goop disputed her version of events. In May of 2026, on the Goop podcast with Kara Swisher, Paltrow criticized what she called super-rich white dudes who are breaking rules, setting rules, seemingly not caring about the downstream impact. The internet was quick to note that a woman worth an estimated $200 million, whose company paid $145,000 for making false health claims to women, might not be the ideal messenger for that particular point. So here is where we land. Goop raised $82 million. It has never posted a profitable year. Its valuation has been frozen since 2018. Its founder promoted products linked to a woman's death, a candle explosion lawsuit, a NASA rebuke, and a settled false advertising case. And during all of that, the founder built a $200 million personal fortune that does not depend on Goop succeeding at all. The wellness empire was never the real business. It was the audition tape for everything else. If this breakdown changed how you see celebrity brands, subscribe and hit the bell. We have a new investigation dropping next week that is going to make this one look like a warm-up.